Grand Rising, everyone. Grand Rising. Thank you for jumping on. I appreciate it. Do me a favor as you hop on whenever and wherever you're seeing this from. Whenever you're seeing this, drop your city and state to let me know where you guys are tuning in from. Say good morning. Don't be shy. Stop by and say good morning. My name is Eric, coming in from Columbia, South Carolina. This is the Blank Spot. We are a sublimation blanks and supply warehouse. However, we do teach business information outside of actually making things. As we already know, if you all have a business or a side hustle, whatever it is that you're calling it these days, you have to understand the importance of keeping records. Record keeping is important because you have to prove to the government that you have a business if you want to be able to take advantage of it. Now, there are lots of people. We're going to jump right into this, guys. There are lots of people who have believed in the past that, you know what, if I don't make money, then I don't claim anything. But that can be that couldn't be further from the truth. That is not correct. Now, a lot of people want to know, when we start talking about stuff like this, you know, what's your qualifications? My qualifications is that I'm a business owner. We've been business owners for the last 9 years, and we found out how important it was to keep records very early in business. So it's very important to keep and develop good record keeping habits, and we're going to get into this as to why you want to do it. So it's not going to be a long video. It's going to be relatively short. We're going to get straight to the point, and then as we share this information, you'll be able to see this again live on our YouTube channel. So if you guys are watching this from our YouTube channel, make sure you subscribe and hit that bell to be notified. If you are not watching it from our YouTube channel, then you need to go to the YouTube channel right about now. So now, once again, my name is Eric, coming in from Columbia, South Carolina, and we're going to be talking about why it is important to develop good record-keeping habits. Why it's important to develop good record-keeping habits. Grand Rising, thanks for jumping on. So, why is record-keeping important? I'm going to try to make this fun, okay? We're going to try to make this fun and easy for everyone to understand. Everyone in business must keep records. Good records is going to help you to be able to do the following. It's going to help you to monitor the progress of your business. You're going to need good records to monitor the progress of your business, because records can show whether your business is improving, which items are selling, or what changes need to be made, what adjustments you need to make in your business. Great record keeping can increase the likelihood of business success. Now, I want you to think about this. Whether you have a business or a side hustle, you can actually claim your business expenses and, in essence, lower your taxes and keep more of your money. Don't believe the myths about what people say. If I didn't make money, I can't claim it. That's not true, okay? Why is record keeping important? Preparing your financial statements. That's why. You need good records to prepare accurate financial statements. These include things like income, profit and loss statements, and balance sheets. Now, this may sound all boring, but it's very beneficial if you're going to build a successful business. These statements can help you in dealing with your bank, your creditors, and help you to manage your business. Now, an income statement shows the income and the expenses of the business for a given period. That could be a month, that can be a quarter, that can be half a year, or that can be a year. Or it can show you some type of record of how well you've been doing over the past several years. A balance sheet, however, is going to show you your assets and your liabilities, and also what type of equity you have in your business on that given date. A lot of people don't know that your business has value. And usually, you can actually go Google this, but usually your business is going to be worth 10 to 20 times what you actually made in that 1 year. For example, if I made $100,000 in business and I've been averaging $100,000 for maybe 3-4 years, then I can safely say that I multiply my $100,000 times 10, and that is what my business is going to be valued at. Okay. Identifying sources of receipts. You're going to receive money You're going to receive money or property from a lot of different sources. Your records can help you to identify those sources of your receipts. We don't want to be trying to, think about it on the top of our head. Where did this come from? You're going to need this information to separate your business from your non-business receipts and your taxable and non-taxable income. A lot of people, when they start keeping records and are new to business, they just keep everything. That's not a great idea. You want to go ahead and separate your personal from your business, because if you find all those things together and you give that to a tax professional, they may not be diligent enough to separate those things themselves, and they may end up adding that stuff to your taxes. And if they do, and an audit comes up, you could be in trouble. Okay. Also, keeping track of your deductible expenses. You may forget expenses when you prepare your tax returns. So keeping good records is going to help you to remember what you need to have when you go to give your information to your tax professional or your CPA. Also, it's going to help you to prepare your tax returns. You're going to need good records to prepare tax returns. These records can support and will support the income taxes, the expenses, the credits, and anything else that you report on your taxes. Normally, these are the same records that you're going to use to monitor your business and prepare your financial statements. That means that if I buy a printer, I need to have the receipt for that printer. If I pay someone outsourced to do a job, I need to have that receipt as well. So, likewise, if I receive money from a customer or a company, then I need to have that as accounts receivable. Okay. Which record keeping system is best? It's your choice. It's your choice which one is best. You might choose to do a manual system, or you might want to do an electronic system. Both of them, though, require that you abide by the rules of the IRS. Here's the thing. Keeping a manual system, and that's how a lot of people get started. They get started with an Excel spreadsheet, or they may get started just generally writing it down in a ledger book. That's fine, but that gives you a single point of failure. Putting it in an Excel spreadsheet or putting it on a manual type of documentation could cause you to have that lost or even get damaged. So you want to think about that. Digital systems are, in my opinion, better, and then having a manual backup is going to be good as well. Once again, keep all records and receipts that are related to your business. No personal receipts shouldn't be in there. Okay. Business meals, business as it pertains to your vehicle as gas or miles, phone, office supplies, either it's a business phone or cell phone, rentals, cash register receipts, bank deposit slips, invoices, credit card charge slips, and any forms of a 1099 miscellaneous that involve your business. Now, of course, there's lots of other things that you can actually get into as far as record keeping, and you have the ability to go to the description, the link in the description in our YouTube. We have a couple of classes, a couple of courses that are available for you on our academy. You can go and get the record keeping course, or you can actually go and get the common tax deductions course. But both of those are going to help you to explain how to actually keep records the best way and how to actually get record keeping software. The common tax deductions course, which we're going to probably talk about next Thursday, is going to help you to understand the basic tax deductions that you have as a business owner. So once again, like I said, this is going to be a short video. Hopefully you got some value out of this. You can go back and review this video to see if this actually applies to you. Remember, whether you make money in business or don't make money in business, you still have the ability to write off your business expenses. Okay? Don't let anybody tell you, hey, you have to make money in business before you can write it off. That's not true. All right? So writing off these expenses are going to help to lower your taxable income, and in doing so, you're going to be able to keep more of your money. Thank y'all for jumping on. I appreciate it. Like I always say, ladies and gentlemen, when you know better, that's when you have the ability to do better. And the only knowledge that's powerful is properly applied knowledge. Make sure you share this video. Make sure you go back and subscribe if you haven't subscribed, and hit that bell to be notified when we go live, because we're going to be going live throughout the day. anytime. But just remember to connect with us, every Monday through Friday at 8 a.m. Eastern Standard Time. You guys take care, and I'll see everybody at the top because there's too many people struggling at the bottom. Peace.